What's going on, guys? This is Steve. Welcome back to my channel. I'm your mortgage broker. Today I have a special one for you guys. I want to share with you. It's going to be a two-part video. First part is going to be we're going to go deep into qualifications. What does a lender do when you submit your documents? What kind of factors are used in order to determine how much of a loan you could receive? And the second part of this video, for those of you that are still watching, it's going to be a special take where I'm going to share with you guys how you could increase your purchase power by $100,000. And the key is not even adding more down payment to it. Keep watching. So let's take a look. I'm gonna be using this. I'm doing a screen share right now, so you guys are gonna be able to see what I'm seeing. I have a borrower here. We're calling him Mr. Fake Borrower. So the purchase price is $700,000. They have 10% down, which is $70K. The interest rate today is 6.5, 30-year fixed. This is a really aggressive first-time buyer program that we're offering, and it's actually valid for the whole country. So this is a really hot program right now. 6.5, 10% down. Here's the monthly payments. So I live, and majority of my business is in California. So in California, we use 125 of the purchase price for the property tax per year, and then here the calculator divides it by 12. So per month it's $729.17. The mortgage payment $39.82, $100 for a policy against fire hazard insurance. I know some places in California it's a little bit more now because of fire zones, but plus or minus it should be about $100 per month for a $700,000 property. And mortgage insurance $189. I know a lot of people, and I get this a lot, believe me, a lot of people are scared about mortgage insurance. They think it's some evil number like $300-400 per month, but here with a good credit score, 740 and higher, we're only talking about $189, so it's very manageable. So all in all, we have monthly mortgage payment with tax and insurance, PMI, $5,000 per month. Now, let's take a look how much Mr. Borrower makes. So Mr. Borrower works a full-time salary position, earning $12,000 per month gross, or $144,000 per year. I'm just keeping it simple. We're just using the salary, but sometimes people have various income sources that get them to this number, but for the sake of this example, we're just using 12,000. Now let's take a look at debts. Mr. Borrower has an American Express credit card with the balance of $11,500. Now this is a 30-day account, so these accounts are not used for qualifications because lender assumes that you pay them off every month. And they have a Capital One auto loan, which has $30,000 balance, and the monthly payment is $1,000. So we have $1,000 that we have to calculate for this borrower's qualifications. So let's go back to our first screen. So $5,000 per month plus the $1,000 car divided by 12,000 per month gross income gives us these numbers here, 50%. Now, in my 9 years in business, I've gotten some loans through the finish line with the higher than 50 debt to income, but rule of thumb, this is the ultimate max. You don't want to cross that, and chances are with things going on right now and lenders tightening, this would be a scenario that more than likely will not get through. But for sake of this example, let's use a 50% ceiling for the most that's allowed for conventional lenders. So 700,000. Now I get this a lot, guys. So people come to me and they get qualified for 700,000 because this is what income allows. Then they get excited. They're like, okay, numbers make sense for me. Let's go take a look. Then in the process, they realize that what they want to buy or what they like is going to be a little bit more. They might send me an email, they might send me a text. Sometimes they get lucky because the interest rates might drop and then basically they get more purchase power. So I could tell them, yeah, so interest rates dropped, you could definitely squeeze out another 20, 30, 40K on the purchase price. But it's not always the case, and then more than likely recently, rates have been pretty flat, or in some weeks even higher. So that might not be an option. You might not get that lucky. As I promised, in the second part of this video, I'm going to show you guys a small mortgage hack that's gonna allow you to qualify for $100,000 more using the same exact cash. Now, in this particular borrower, let's take a look how it works. So I'm going to change the purchase price to $800,000. 10% down, look at this number, it puts us at 55.6. Now, in all my years, I've never conventionally seen this allowed. Even an FHA loan, it's very rare. So I want to say this is a no way Jose type of thing. So this is not gonna fly. But borrower says, you know, if I can't get 800,000 or close to it, I might as well wait because I don't want to compromise on the property type. Now watch this next step very carefully as I'm explaining it, because this is something that in your typical, I don't know, Wells Fargo, Bank of America, if you submit an application online somewhere, you might not get this extensive analysis to let you know, okay, well, if we want to buy more, I see a way to do it. Take a look. Right away, because I know that this person has a car loan, I'm going to do something like this. Take a look. So we're going to change the down payment to 5% down, which is 40K. I'm gonna manually change the mortgage insurance because I already know that it's gonna be about $229. And that makes their total payment close to $6,000. Now let's take a look. We have 58.05. As I mentioned previously, this is no way Jose, it's not gonna work. So, but I remember they have this car for 30K. I'm gonna hit this little box right here that says will be paid off. Now, very important to know that it doesn't have to be paid off up front. All we need to do is hit this button. We're gonna tell the lender that you have enough money to pay this car off before you get your keys to your new house. I hit save. Boom, take a look, 49.72. Now you're gonna make it through a conventional underwriting. And look what we did. We changed the down payment, 40K. 30K to pay off the car. That's a total of 70,000. Remember, we had the same 70,000 initially when we were qualifying you for a 700,000 purchase price. Moral of the story, guys, work with seasoned professionals that would be able to analyze your situation and let you know right away, like, hey, I understand the market is tough and you don't want to compromise on the house. Let's take a look how we could get your purchase power up. There's many more creative options to do this. This is just one of them. I wanted to share this with you. Again, my name is Steve. I'm your mortgage broker. Any questions, please do drop a comment below. I'm very excited and seeing this channel grow more and more every week. So if you like the content, hit like, subscribe, share with your friends and family. I'm looking forward to seeing you on the next video. Thanks, guys.